Hey everyone, welcome back to Corporate Decoder, the place where we dissect corporate filings faster than a SPAC deal dissolves. In this episode, we're diving deep into Solid Power Incorporated's latest financial report, looking at how they're tracking in late 2025 and what it means for their ambitious battery technology goals. Before we jump in, if you love getting straight no-nonsense finan. Sigh. All Insights, hit that subscribe button and the notification bell so you never miss out. And hey, if you want to chat about these filings with other finance enthusiasts, join our Discord community. The link is in the description below. Solid Power is trying to revolutionize battery technology, moving away from the liquid stuff in our phones and cars to solid state batteries, which they believe will be safer and last longer there. Main product is a special solid electrolyte material, and they plan to sell this and also license their battery designs and manufacturing secrets. This is a big bet on the future of electric vehicles and beyond. Let's talk about the money. The company's balance sheet as of the 30th of September 2025 shows some interesting shifts. They had about $47 million in cash and cash equivalents on hand. This is up significantly from around $25 million at the end of 2024. That is a good sign they have more ready cash. But where the real action is in their marketable securities and investments. These are basically short-term and long-term investments in things like bonds and other financial instruments as of the 30th of September 2025. These totaled over $253 million. That is a big chunk of change and a decrease from the over $302 million worth at the end of 2024. They've been tapping into those investments. Overall, their total assets stood at about $416 million on the 30th of September 2025, down from over $448 million at the end of 2024. This dip isn't necessarily bad given they've been using their cash and selling some investments to fund operations. Now let's look at the engine that drives the company, the income statement. For the 3 months ending the 30th of September 2025, their revenue was about $3.7 million. This is a decrease compared to about $4.6 million in the same period in 2024. For the 9 months of 2025, revenue was similar to 2024, coming in at about $15.3 million in 2025 compared to $15.7 million in 2024. So revenue is pretty flat year over year, which is not ideal for a company trying to grow quickly, however. They also have something called grant income. This is money they receive from things like government agreements, like the one with the US Department of Energy, which is up to $50 million for the 9 months ending the 30th of September 2025. They recognized about $2.8 million in grant income, which is pretty good and helped offset the flat revenue. But here is the reality check. Operating expenses are still huge. For the 3 months ending September 2025, they posted an operating loss of over $24 million. The 9-month loss was even bigger at over $74 million. This means they are spending a lot more than they are bringing in through their core operations, which is typical for a research-intensive company, but still a concern. One interesting item is the change in fair value of warrant liabilities. This is a non-cash item related to the value of their outstanding warrants. It caused a loss of about $3.5 million in the third quarter of 2025, compared to a gain in the prior year. This fluctuation is normal, but it highlights the swings in their financial results. All this adds up to a substantial net loss attributable to common stockholders for the third quarter of 2025. This was about $25.8 million, and for the first 9 months of the year, it was nearly $66.4 million. That is a lot of red ink. Now let us dig into the cash flow statement to see where the money is actually going. For the first 9 months of 2025, the company used over $55 million in cash from its operating activities, which is an increase from the prior year. This means their day-to-day business operations are still burning through cash at a significant rate. On the investing side, however, they actually provided about $46 million in cash. This seems counterintuitive, but it is mainly because they sold a lot of those marketable securities we talked about earlier. They cashed in over $211 million from selling securities, while only purchasing about $158 million worth. This is them taking profits, or more accurately recouping cash from their InVev. Statements. Financing activities are where they brought in significant cash. For the 9 months of 2025, they brought in over $30 million. This was largely due to an at-the-market offering where they sold new shares of their common stock, raising over $32 million. Net, this is a common way for companies like Solid Power to fund their operations when they are not yet profitable overall. The company's liquidity position is strong, meaning they have enough cash and easily convertible assets to keep running for at least the next year. Their total liquidity was over $300 million at the end of September 2025, which is reassuring now. Let's talk about the risks they are facing. They spell some of these out very clearly. They openly admit there is a huge uncertainty about their research and development success. Will their technology actually work as planned? Will competitors beat them to market? These are fundamental questions for any cutting-edge tech company. They also acknowledge they are still a research and development stage company and expect to keep losing money for a long time. This is a crucial point for investors to understand. They are not profitable yet and might not be for a while longer. Protecting their inventions, their patents, and their trade secrets is super important. They need to make sure no one steals their ideas, especially as they expand globally. Now let's look at the bigger picture and my take on solid power. Solid power is playing a high stakes game in the battery industry. The solid state battery market has massive potential, but it is also crowded and technically very challenging. The company has secure important partnerships like with Scaon and BMW, which gives them credibility and access to crucial development resources. The grant money from the DOE is also a significant boost, helping them fund the construction of their pilot electrolyte line. However, the financial picture remains a challenge. Their revenue is not growing significantly, and they are burning through cash at high rate. While the at-the-market offering and their existing investments provide a financial cushion, they will need to demonstrate a clear path to profitability and scalable revenue generation. Soon they are also dealing with legal challenges from former executives and directors, a situation that could become costly. The company's strategy seems sound, focusing on core technology development and staff. Strategic partnerships, but execution is everything, and a critical factor will be their ability to actually scale up production of their solid electrolyte material without major hitches and to make sure their technology meets the demanding standards of the automotive industry. They are making progress, but the road ahead is long and risky. The next year or two will be critical to see if they can move beyond research and development and start generating meaningful revenue from actual product sales. Alright, that is our deep dive into Solid Power Incorporated's latest financial report. What do you think about their chances in the solid state battery race? Let us know your thoughts in the comments below. If you found this breakdown useful, give this video a thumbs up and a subscribe. It really helps us out, and remember, join our Discord community for more real-time discussions and analysis. See you next time on Corporate Decoder.